Whether you're watching, listening or reading this, welcome back to the Runpreneur vlog. We're on a mission to raise £1 million for children's charities by run vlogging on consecutive days the distance of one lap around the world. It's a staggering 40,075 kilometres. It's going to take somewhere in the region of about 14 years to accomplish, so plenty of time to raise the money. I'm going to do a minimum of 5 kilometres every day, and I'm even going to do it barefoot style. So for those regulars will know that I vlog about my passions, which are entrepreneurship and running, and most importantly how my passions link with helping people overcome the emotions of stress, overwhelm and anxiety by using exercise as a release mechanism. It is a beautiful day today. The sun is shining, finally feels like spring has arrived. A little bit breezy but lovely running conditions. In shorts and no ear cover today, so it's always a good sign. And it's Tuesday Tactics today. We talk about all things business systems and outsourcing, and today's topic is how to raise investor finance. So as always, if you like this episode, give it a like and a subscribe, and let's get started. So, raising investor finance. Now this was a question raised by one of the Runpreneur community members, Lisa Wilkinson, and I'm covering this in business systems and outsourcing section of my blog. It probably would be just as suited to the marketing side of the vlog, because that's the approach I would take to this. Now, I have raised a considerable amount of investor finance over the years. I have several properties and assets that I co-own with joint venture partners, and so I've probably raised somewhere in the region of £500,000 over the years with my various different investments. Some have gone on to be wonderful, some have gone on to be not so great, and we've had to kind of separate and those sort of things. So I've seen both sides to investor finance, and what I'd first and foremost say is people always talk about no money down investment strategies, and they only call it no money down because it's none of their money down, and they always refer to OPM, which is other people's money. Well, first and foremost, that isn't no money down. There is a significant amount of money has gone down, and even worse, it's somebody else's money. And I personally find the responsibility of managing somebody else's money far greater than the responsibility of managing my own. Now, don't get me wrong, I take my own money extremely seriously. But when somebody else has put their trust and faith in you to deliver them a return, then that's added pressure and added responsibility that shouldn't be taken lightly. So, too many people are out there teaching investment and development, property, all kinds of different strategies. And I agree, look, if you haven't got any capital to invest, using other people's money or investment funds is an option. However, you should only ever go down this route when you have the social proof and the experience and the credibility to make that investment less risky. If you're somebody brand new to a strategy and you have no money, but you're going to just go and start off by partnering up with someone with lots of money, you're not qualified to do that, in my honest opinion. No matter how much education you've had, when you've done or you've started doing some lower down stuff, which is truly low money down or no money down, and there are other multiple strategies you can do to do this, and get a bit of a track record in the industry before you then make the first approach to raising investor finance. So anyway, that's my rant over, because I've been on both sides of this, and I see it happening every day, and I see a lot of people losing a lot of money every day as well. I know that we're just coming through a global COVID pandemic, but a lot of people have just used that as an excuse. Sometimes invest in the wrong person without the right experience, you might as well just throw your money away. That's just my opinion. Anyway, back to the topic at hand, raising investor finance. So how did I raise investor finance for my joint venture deals? Well, I had an existing network, so I didn't do it from a standing start. Well, I suppose I did really, but I did it by face-to-face. Now, obviously, we're in a time at the moment where face-to-face is more challenging. You can start meeting people outside now, and now the weather is improving somewhat, that becomes an option again. But when you're asking for people's money, it's very, very difficult to do it without face-to-face contact. So that would be something for consideration. So the way I did it is I had some existing people that I knew, like friends who I'd had relationships with in the past, and they had money they'd made in their career and they were looking to invest it. So just through friendship and conversations, some of my investments kind of transpired from that process. Then I did meet some brand new people to get some significant investment as well, and that was from the multiple streams of property income progressive property training event. It's a completely free weekend event. They generally get a couple of hundred, probably even more, in a room, and basically it's a pitch fest. It's all the different trainers pitching their various income generating strategies to a group of novices who have potentially got cash on the hip. So in that regard, that I only went to 2 of them in my life. One was the first time I went to it when it was the first one being released by Progressive Property, but then the second one I went for networking. And the networking event, you just speak to people and you find out where people are, what their ambitions are, and very easily you can get a handful of names of people who are looking to get into property for the first time. They have funds to invest but no experience, and quite often you'll also find a pool of these people who stay for the whole event and realise that there's a lot of work involved in making money in property. I'm only talking about property here, by the way. Raising investor finance for other things, you know, you'll take a similar approach, but it'll be a different industry. So, but you find that a lot of these people will then think, blimey, there's a lot of work involved in this and I don't have the time to give. And that's when, if you're experienced and you start talking to people and you have a track record and you have credibility, then you could always speak to people and start nurturing those relationships. I would never have pitched on the first day, but I'd be clocking people who were potential for investment, and I would keep in touch with them. I'd share business cards and I'd drop them follow-up information to follow up with them to arrange a kind of a meeting outside of that environment. And even then I wouldn't pitch. I would try and always let them lead. And the benefit was as well at this event is, my mentor is Rob Moore, who is the co-owner of Progressive Property, and I was on his and Mark Homer's first ever property masterclass. I mean, they're a massive multi-million-pound training business. I was on their program when they were a little tin pot operation working out of a dingy hotel on the outskirts of Peterborough. So Rob knows my journey. He was still doing these events back then, and he'd regularly refer to me in the crowd or call me up on the stage as a bit of a success story for him, if you like. And that instantly gave me credibility and kind of elevated me above probably the other 50 or so people there that were trying to get investment. So I did have a helping hand in that regard. But it's very, very a slow build, okay? Slow build, nurture. You're generally going to be asking people for tens of thousands, possibly hundreds of thousands of pounds. So it's a massive amount of money. And you can't just go straight in and go, I want money, I'm doing a development, I need money for this. It doesn't work that way. You're not selling anything, you're basically just constantly building your credibility, integrity, and you're building that relationship with them, and you almost want them to pitch to you. Right, I need to put this somewhere, can I invest it with you? And that was always the tack that I did, and believe you me, if you nurture that relationship correctly, and you kind of talk about what you're doing without ever pitching, they will always say, well, you know, you're looking for anybody's partner in this stuff. And that is the best way to raise in investor finance, in my eyes. The other thing is contractually getting things right. And the first thing you want to do is, if you get to that stage, I mean, you never even discuss this until, you know, you're at that stage where the money is potentially available. So then you draw up a heads of terms. Okay, so you always need a solicitor to kind of produce the actual loan agreement between you and the investor, but you would always have a heads of terms, and all you do on there is what are your fears, okay? What is the investor's fears? What are your fears? Get them all down and work out what happens in each of those scenarios, and look at worst case scenario. Believe you me, people are scared to do this, but if I was an investor and somebody was going through worst case scenario with me, I'd be like, wow, this guy's protecting our position in worst case scenario. This is great. A lot of people think that if you talk about worst case scenario, the investor is going to lose confidence in you, and that absolutely isn't the case in my experience. So at heads of terms, just go through all of the fears. People talk about off-the-shelf contract. I don't agree with them. Pure and simply, you have an off-the-shelf as a template, but you will always amend it to fit the concerns and risks associated with each individual. Every agreement should be bespoke to that person's fears, to your fears, and then you put that down in heads of terms, what you're going to do in each scenario, pass that over to your solicitor, and they will amend the contract to reflect those changes. So that's what I did in the past, okay? If I was going to raise money again, I'm not looking to raise money now, so I'm more kind of into bread and butter stuff now, lower risk. I don't like taking on other people's money. I'd rather earn the money myself and invest it myself. I'm not at the stage where I need to go for aggressive growth anymore. So I don't want that added responsibility and pressure in my life at this stage. And I've had a couple of experiences which didn't go the way we would have liked them to go. And I've put them right, and I'm still in the process of putting some of them right. So I'm not ready to do that again. And that's just where I am in my cycle. But absolutely, it is an amazing strategy if you do it correctly. And the ones that have worked wonders and worked well, I've made a lot of money from. So you know, you just have to put the risk and reward side of things up, and where you are on your risk profile, where you are in your kind of business life cycle, your ambition scale, all these things need to be taken into consideration. So what would I do now? Well, we're through COVID, or coming through COVID at the moment, so these networking meetings are few and far between. They're never at the kind of level they once were, because people's confidence has been hit. You know, getting 200 people in a room, a lot of people wouldn't fancy that at the moment. I know you're probably going to be able to do that come June time, but still, people's confidence might be. I still think face-to-face is an integral part of raising investor finance, but you can do an awful lot on social media now to build your credibility and integrity. And, you know, so the problem with social media is so many people will just spout off about positives or perceived positives in their life, never hit the negatives. And I think you need to be true and honest with yourself about what you're putting out there. Like, I talk about the ups and downs regularly, and you know, I've lost businesses, I've almost been bankrupt. I talk openly about this, and I think it's important. I think that actually gives me more credibility. And you know, I refer to big investors, and they talk about the importance of cycling, and what they mean by that is the business cycle. That if you haven't been successful in business and almost lost it all, or lost it all and be on the way back up again, they won't invest, because you learn so much more in the failing of a business than you do in the growth of one. So I think it makes you even more investable that you've got that experience, and you can use that as a negotiating tool. So social profiles, social media, so important. We all talk about it. Some people don't like doing it. Some people love doing it, putting their posts. I hate social media, but you probably see me everywhere because I committed to a challenge, which is for the greater good than my uncomfortable voice or style in front of the camera. You know, I'm trying to raise £1 million for children's charities. That's far more important to me than worrying about stuttering a word or coming across, you know, as I would like. So, yeah, if you really want investor finance, you have to put yourself out of your comfort zone and do it. And okay, it's time consuming. I have a team of people that I've built. You know, I do a long form video, which is this one. I do a 1 minute summary video, and I do a 30-second snippet video every day related around the same topic. And those pieces of content go out. So I think on the last count, about 32 different formats across social platforms. So I'm everywhere. You know, it's taken a long time to do this, and it's been a big commitment, but loads of things have come from this social media presence that I've kind of generated now. My following's pretty much doubled in about 10 months. Now, and I didn't have a really small following. I had a following of maybe 7,000 or so. I'm now kind of 16,000, I think, on last count. So my following's doubled in like 10 months from doing this every day, the consistency of what I do. But what I'd be doing if I was trying to raise investor finance is I would be vlogging about what I'm doing in relation to or not vlogging, but I'd be putting content out there in relation to what I'm working on or what I'm looking. And even if you are at the very early stages, try and build some credibility as somebody in that industry. So if I was brand new to property, for example, I needed some money to do a development, I'm probably not going to go straight into a development. I'd want to go through the stepping stones. So I'd probably start with rent to rent or deal packaging, the kind of low money down kind of strategies to begin with. Rent to rent, I might do rent to HMO as an example. I might try lease options. Okay, so lease options are a bit more specialist. I would certainly probably start with deal trading and rent to rents would be my, and they work in tandem because you can keep the properties that you source that you want and you can sell the ones that you don't. A lot of work will go into that, but I'd be documenting the whole journey of setting that up, speaking with people, I'd put the deals out there, but I wouldn't be selling. I would just be documenting and informing people. The best way to sell is when somebody asks you to sell to them, and they will do that. They'll give you buying signals, and anybody who engages with your content is interested in your niche. So I would ring fence those people, and there's this. I'm just talking about Facebook at the moment. There'll be other ways to do it on other platforms, but there's a little hack on Facebook called Friends Lists, okay, that loads of people don't know about. And what it enables you to do is to segment your friends, okay? So anybody who's engaging with your content about property, I'd ring fence and I'd put them as engaged. At some point, the other thing you can do as well, if you don't want to sell yet because you don't feel the credibility, then just keep putting content, documenting your journey, and keep ring fencing those engaged people. The other people you want to be following is if you're in lots of different Facebook industry specific groups, anybody who's promoting stuff, and you'll see them all the time, who wants my free lead magnet or my free guide or a quick sales call? Anybody who's putting their hands up saying me, they are buying signals. So I would then friend request each of those, and as and when they accept, and most of them will, I would add them to a potential buyers group. Okay, so you're segmenting warm and hot people, people that have clearly put their hands up that they want to buy, and you've also got people that are engaged or interested in what you do. Okay, I'll keep doing that until you feel that you've got enough experience or enough following, enough traction to be able to start thinking, right, now I'm ready to start looking at bigger things. And you'll know when this is right. I would certainly get educated on whatever you're going into where you need additional funds. It might just be to buy HMOs. And if you're doing rent to HMOs anyway, you know the process, you've got a track record of that, or it should be relatively easy to raise money if you've been performing well in that niche, okay? But if you're going to convert a disused office to a block of flats, for example, and you haven't got much of a track record in doing so, you'll be perceived as a much higher risk. But if you've got several renovations and you've used other people's money to kind of build an HMO portfolio with somebody else, and then you've got 5 or 6 of them, then you go, right, I've now got this development. Now here, Mr. Investor, I've done these deals. They've all worked, they've all produced. This is just doing a bigger version of that. Then you've got much more credibility to raise that money. But again, follow the same principles. I would not be pitching for money. It's the cardinal sin. I'd be indirectly selling, just telling people what I do and letting people come to me. And anybody who's engaging, I would be ring fencing, so that when I start putting more promotional based content out at some point in the future, okay, I'll be sending it just to those audiences. If you send it to just those audiences, you're much likely to get a much better response than just Aunt Joan or whoever who's on your friends group who doesn't want to see you pitching her to invest in your latest property deal. Maybe Aunt Joan is minted and wants to invest in property, and if that case arrives, then she would be certainly in your pool of potential investors. But I'm just assuming you want your content to be going to the right people, is what I'm trying to say. I've got a big tractor coming past me. So so I hope that helps. I've kind of covered it at a bit of a high level. I've kind of covered it at a high level, but hopefully there's enough information there that would let you know how I would go about raising investor finance. I've raised about $500,000 over the years. It's a sizable amount, but not a massive amount. I know people have raised millions, okay, but there's I've got pretty much the life that I want. I've got quite a lot more targets to accomplish, but most of them I can self-finance or organically grow now. And I'm not in that period of accelerated growth anymore. I'm at a level where I'm picking and choosing. I'm actually saying no more to what I'm saying yes. So it all depends where you are in your kind of business journey or your entrepreneurial journey, depending on how much risk you want to take. But just to summarise, if you take on anybody's money, it is a massive responsibility, and you should never ever underestimate the responsibility that comes with that. And if you do, you'll potentially lose that money, and with it you'll lose your credibility, and with it you could potentially lose everything, because you will be a guarantor usually on these types of agreements. If the investor is savvy, you'll certainly be a guarantor. So if you don't pay it back, they can come after you. So you need to be very, very careful about your kind of level of exposure. So that's pretty much it for me today. As always, if you've got any questions on this, drop me a comment. I'll respond to everyone. If it's a bigger topic, I'll do a separate vlog episode and tag you in. Do check out the link in my bios where you can watch, listen or read my content, and most importantly, keep up to date with my mission to raise £1 million for children's charities by run blogging on consecutive days, a distance of 1 lap around the world. And all I have to say is, those will know that my content is always geared around helping people overcome the emotions of stress, overwhelm and anxiety by using exercise, or in my case, run vlogging, as a release mechanism to relieve those daily, weekly pressures in the form of stress, to clear your head, process what's going on, gain clarity, refocus and move on. If you don't have that process in place, and whether that's in the form of exercise, meditation, reading, walking, yoga, whatever, you need that process, that release mechanism. Because if you don't have it, those stresses will evolve and will turn into overwhelm as you haven't been relieving all of these stresses from your mind, and it will grow and grow and grow and grow and grow. You'll start being overwhelmed. You won't know which way to turn. You'll like have a seizure and you'll procrastinate and you won't get anything done. And then before you know it, the overwhelm turns into panic and anxiety. And then you're flirting with the edge of mental health issues, which clearly we want to avoid. So I've been there. I've lost multiple businesses because of this. I've lost multiple business partners because of this. And I've almost been bankrupt because of this. And there's no coincidence in the last 10.5 months since doing this running vlog, which is my release mechanism, I've made more progress than I have done in the previous 4 to 5 years. So hopefully there's enough social proof to show that this stuff really works. And my pledge to you is, if you are going through similar issues, drop me a message, okay? There's no catch here. The Runpreneur vlog there's no selling ever, okay? We're raising awareness and collecting donations, which are purely optional, but the value I give is for free, and the help I give is for free. There's no catch. So if you are someone struggling, drop me a message. We'll arrange a quick call, and I know that the hints and tips I can give you are transferable to your life. I know that already because I've helped so many people already, and I know that it'll make a massive difference. And so many people I've already spoken with, we've managed to pull back onto the right path, and I'm prepared to do the same with you as well. So the help is there. You don't often have to pay for it. You don't always have to pay for it, and it's often easier taking it from a stranger than someone nearest and dearest. So reach out if needs be. So that's it for me today. If you like this episode, give it a like, comment and subscribe. Keep up to date with the journey, my mission to raise £1 million for children's charities, by clicking on the link. And all that's left to say is stay positive, stay happy, and I'll see you tomorrow.